This week, George and I from Welch Team are super happy to introduce our guest for the week, Joe Verseput from Future Home Loans. And Joe is also, he has a team, two Navy vets. So Joe, go ahead, introduce yourself.
Yeah, hey, I'm Joe Verseput, just like Kelly said, two Navy vets team at Future Home Loans. I have a business partner that's like an inside loan officer transaction manager, so we kind of tandem it on our team. Between us, we have about 25 years of mortgage experience, and just, doing our thing just like you guys are through this whole pandemic.
Absolutely. Just shift, adapt, move forward.
That's it. Pivot.
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 And there's George. George, say hello to everybody.
Hi, everyone. I am George Pottenkulam, also with the Welch Team. We're excited to have everybody back again for another week of us just chatting.
Just chat. All right, I'm going to get us all set up here to start our actual presentation. You guys are going to see my Facebook page for a second because, of course, I'm not prepared. Here we go. Where's my presenter slide? You know, it never fails. Still not prepared. Several weeks in.
That means you're busy enough, to not mess with the small stuff.
I know. Why can't I find present? What am I doing? Oh, here we go, guys. Woo! It feels like a Monday.
We got up to 8 people viewing us doing this, so it's getting traction. We must be doing something right.
We're getting there, everybody. Exciting time. So May 13th. Interesting little Freudian slip there. March 13th was when all our little stay-at-home orders started. So I don't know, maybe there's a weird correlation there. But again, welcome to everybody who just joined us. Thank you so much. I see we've got 10 people live now. Joe Verseput, Future Home Loans, two Navy vets, is on the call with us today. As usual, myself, I'm Kelly DeLucia, and George Pottenkulam from our team are here. We're going to get right rolling into it. So let's talk some weekly trends. I'll kick us off here with what is happening with sales stats. Great news for us. You guys might, I don't know, this might not look as good to everybody out there until I go through the numbers and explain it. But if you see, I'm going to jump right to this week, which is in that far right column, the circle around it. Pending sales are up. So pending sales are up. We had 814 pending sales last week. We are gaining homes going under contract, 80 homes to 100 homes a week. That's fantastic. What everybody has to remember about my little orange indicators for new listings on the market and sold homes is that these can be lagging numbers. So 60 days ago, March 13th, that's when we all started staying at home. So it is only natural that what went on the market 60 days ago or might have just gone under contract and is just closed in the past week is going to be lower. And that's just kind of how, we work in 60 to 90 day increments. So these are great numbers. It's fantastic to see pending sales up. Anybody else have anything they want to add onto that slide?
The pending sales definitely makes a big factor there. We said that the last week and the week before, the activity for buyers on the market just increased significantly the last 2 weeks. Mm-hmm. And that is an example right there showing you more people were out and about, more people were ready to make offers. And of course, now we're seeing that many homes under contract.
Definitely.
I agree. I'm seeing a lot of doing the same amount of pre-approvals. We'll get into some of the other stuff that, the additional overlays and stuff that are coming into my world. But as far as the amount of interest and activity, I think a lot of the buyers that were kind of on the sidelines a little bit, if they're one of the haves that has the job and not the have-nots during this time, they're taking that step forward into making that purchase, it seems like to me.
Absolutely. Absolutely. Sorry about that. I keep clicking around here. Joe, I just made you a co-host so that you could control something if you wanted to at some point in time. So if you
cool.
Yes. So
I feel powerful. Thank you.
Super. I really like to empower the people that come on our show. Hey, Lexi, thanks for joining us. Hey, Kyle, good to see you. Hopefully things are okay out in California. I know you guys had some not so great news out in LA County. So we're all with you here in North Florida. So guys, what are we seeing in the lending sphere? You know, Joe, this is your area. Why don't you take us through?
Yeah, the first one I want to talk about is forbearance. And I actually just bought a home about 3 months ago, or February. I was closed on my home. And when I went to sign in for my auto pay, I think it's required because I doubt mortgage companies would try to guide you into this. But the first thing to even sign in for auto pay was about forbearance. And I'm going to go ahead and screen share just this article. And you can go back to yours, Kelly, in a sec.
Okay, no problem.
Where is my
Ventures in live calls?
No, it's not doing it for me. Let's see. Maybe it's this one. We're not going to do that right now, so I'm going to not do that.
Here, try it now.
So Housing Wire at 3:30 yesterday. Forbearance has been a topic of conversation for a while now during this. And there's a lot of misinformation, and it's one of those things that, like, as soon as I hear it, it kind of makes my spidey senses in the mortgage world tingle, because if you live through the modification debacle that people were incorrectly coached into loan modifications. And so when I did like 9 years and I ran a team at Merrill Lynch Home Loans and PHH, and there was a whole era where people were coming back to try to either refinance or get a home, and they just were not allowed to because you pulled their credit, and there's 3 90-day lates, 10 60-day lates, and they're like, well, that's what they told me to do at the time. And this is not forbearance. Forbearance is not modification, but damn, it feels so close to that with the murkiness of the information, the promises that I don't really believe, these duct taping kind of stopgap things that really could hurt people if they want to refinance or buy this. The article's title is that forbearance could be the scarlet letter on your credit.
Right.
Meaning it may not show as a 30-day late, but the CARES Act does not specify about the comment section on your credit report, and your forbearance will go in that comment section. So the title said it's like a scarlet letter. You might not be able to refinance or purchase a home when it comes to it. I look at the forbearance as the last possible option. Exhaust everything first, because there's only a few setups. Even the best one I heard is they tack it on to the end of the loan. You're still going to have a hit on your credit, and that's not most of them. A lot of them are like a 3-month balloon payment. So if you can't pay your mortgage now, how are you going to pay your mortgage in 3 months? And then you could lose your home. I really want people to understand that that's a very bad option. I saw some realtors on different message boards I'm in that were really straying out of their lane and like actually trying to promote forbearance as a way to save money for a couple months. And horrible. So I'm up for any kind of call on forbearance. I spent a lot of times over this last 2 to 3 months, really just consulting people on why it's not a good idea, other options. Maybe you could do a refinance if you still have your job. Don't just take that low-hanging fruit of forbearance. It's a rotten fruit. Yeah.
So basically, you're saying to us, if I have the ability to continue paying, do it, even if it doesn't seem like it's going to have an impact now. Because if I want to buy a home at the end of the year, people are going to look at that and be like, ooh, no, can't lend to them.
Right. Or if you want to refinance too, like I think rates are anticipated to stay low for a while now. Who's to know what the future holds, but I know they came out with a lot of government programs. If you remember HARP during the last crash and different things like that, that it will help borrowers if you can just kind of make it work through this time and not accept that forbearance, because I have a feeling that that's it's a ticking time bomb for you.
Right. Well, you know, I happen to agree. I've heard a lot of the same info that you have, and I think it's nice to have it from a lender perspective. So, Joe, take us through why you don't believe this is like 2008.
Yeah, because it's not the housing market's fault, and a lot of unscrupulous activity that was going on prior to that in a lot of industries that were just not regulated in the correct way. We're not going to see it affect. Housing has, the values is why a lot of buyers are coming. We we didn't really go down. We're just kind of maybe a couple thousand, but we're standing pat. That's because the inventory is still where it's kind of matching the buyers group. And so even though the buyer pool went down, we have a lower inventory. So those homes are turning really quick and they're holding their values. But also guidelines are in place. A lot of people are for, you know, a lot of deregulation, and I'm for smart regulation personally, because I've seen how people work around, work loopholes, and you know, it's a small amount of the industry, but they ruin it for everyone else. So we got to have those regulations, and the SAFE Act did that. I can't approve you if you can't really buy or afford the home. So we didn't have that lagging elephant in the room that hit during the housing crisis with all these people that should have never gotten a loan in the first place. I'm highly regulated for good reason, and that's going to protect this housing market through this crisis and not have that impact.
Hey, we just got a question, Joe, from Katie. Great question. When does the forbearance drop off? When would that
Forbearance?
drop off?
So I wish I knew the answer to that. So what I've heard is that it's a 3-month delay in your pay, and that it's going to show up in the comments section. And someone I saw on a veterans message board that I'm in for a lender in California wrote that they already reported 30-day late on someone that did a forbearance. So if you get a 30-day mortgage late, you've got a year before you can buy a home or refinance. So I would say a year after it's cast, you could then go ahead. But when you're late on a mortgage, that's the biggest no-no in the credit world. So it'll also impact your score aside from buying the home. So when you have a better credit rating, you have a better rate and cost to your loan.
Sure. Great question, Katie.
That is a good question.
Just to add in a little bit to, you know, for one of the biggest things for anybody that has the potential to want to buy a home in the next couple years, forbearance just does not seem like the thing to do. If you can afford to maintain your payments now on anything, credit cards, car payments, do it. I mean, honestly, I think that's the biggest takeaway from a lot of people. Yes, there are a significant amount of people that are in a bad situation and have to do so. But if it's something just to save some money, just don't think that's the right way for people to look at it. And so I'm glad to hear you say that.
Yeah, I would agree with you. Don't take advantage of it if you don't need it. And if it's the last bastion of hope for your mortgage, I feel like there might be other solutions to that as well that we could look into with different help groups depending on your personal situation. But it will definitely stop you from buying or refinancing for about a year or more.
Great question. Great question. Great answer. Great input. Things that we never had to think about before, or didn't think about often, I should say. So, Joe, one of the other things you wanted to talk to us about was tech. You know, what tech have you seen, and what are we doing with it?
Yeah, there's a lot to that one. As far as my personal setup, I've kind of instituted a tech stack. I went a little large with it to be just hard on myself, because you guys see me at a lot of events. You see me doing lunch and learns. I'm in a lot of the different community stuff with veterans, and I just like to be involved in my community and in the small business community, all that stuff. Right. So when this all happened and we all got shut in, I was like, shoot, you know, that's a lot of my money-making activity. So I started that 904 virtual page as a place for people to talk about tech and business and promote different things in town with small businesses. I see a lot of those groups popping up. I bought a 360 camera so that I can do virtual tours and videos for agents. Yeah, so I'm working on getting good at that. And you guys are doing some of that same stuff too, right? You're doing walkthroughs and sanitizing the house and having personal one-on-one showings and different things like that. I also got just a couple other tools while I had some time to sit behind the computer and not be so running around town. Just some other, like the 360 camera to offer agents that work with me to go ahead and shoot some virtual tours with that, where you could go live and walk through and they could look at the house in 360. And then HomeBot's another tool I'm just diving into that is kind of like a constant contact, but just adding value to realtors and clients that would give them updates on the home values, and an engagement tool that's not just like a typical drip campaign. Because part of me feels like everyone gets dripped all over them by anyone. Like once you're a lead, you're getting dripped on all over.
There's 85 emails every day about
Yeah.
something.
Right.
So just a little bit more of like some of the smarter technology that I've had time to go in and dive into.
Mhm.
And I did add like a whole tech stack thing I had with some other sources, and I cut a lot of them off because, you know, I want to be good at it. So I don't want to just be widespread with that, but there's a lot of different tech stuff coming out of that. And the other part is I was calling it a era of compressed adaptation for people that are not really savvy with tech. And
Mhm.
I don't claim to be a guru on anything, but I try to really dive into the tech side of it. But a lot of those clients that, you know, I mentioned it before, a guy has me drive out to Orange Park, won't have a phone call with me, won't talk to me, wants to shake my hand. And it's a guy that his deal was never going to get done, or it's a guy that I need to make 2 trips to get documents, the right ones after we have the initial conversation. That crowd is really coming towards accepting technology, whereas before you heard a lot of the, I just do business that way, I'm old school. And like, I have a lot of old school values, but I also embrace the future at the same time. So like we can go back with our values where a lot of people are getting into their communities during this time, taking time at the house to spend time with their families. We've got chickens in a garden at my house, so our homeschooling's like homesteading. It's cool. So we're going backwards, but we're also
Right.
going forward at the same time. And so that same guy, I'm like, hey, jump on a Zoom call. Well, now that his buddies and family and him have been doing it, it's really nice to get that efficiency out of some of the tools.
George, have you seen an increase in buyers' adaptation to, you know, showing styles that they never would have been okay with before?
Oh, absolutely. I mean, we had a couple occasions where once the virus hit, people were reluctant to go out, but previously before weren't willing to do virtual tours because they need to go touch a house. But they were more than willing to sit down and watch a video or FaceTime with you. And just the fact that all the technology that's out there has just embraced everybody around you with the out-of-towners don't really have to make a trip here to really look at it. I mean, we can literally put our phones on and drive them through neighborhoods so that they can see everything around you. Most people were just wanting to wait to come down to do their initial visits. Now they're relying on agents to do what we do best, is to show them around the area, tell them what's available, show them what's there for you. Versus having to come down here and make that decision first. Because you may just waste 3 months to decide, oh, I don't like this area. So it makes such a big difference.
Yep. I mean, in Florida, we know there's people that are like, I don't know, I might move to Tampa, Orlando, Jacksonville, or Sarasota, you know, and they have no clue. Right. So that's super helpful with streamlining.
Even in Jacksonville, like, you know, people from the north, I'm dealing with some people moving from up north, and you know, they're like, I want to move to Jax, but you know, you got to do what George said, because you've got Mandarin, the beach, south side, the riverside. Like every place has a different complete feel in this town.
Absolutely. So what else can you tell us about what is happening with credit guidelines, interest rate, employment
credit? A retraction of a lot of the credit optionality I had before. I guess you could look at it as anything that was a little bit of a one-off kind of situation before is either going to just not be done right now or come with a larger rate and fees. Specifically the low credit crowd, I was doing down to 580, and then I brought on someone that was doing down to 550 even like 3 or 4 months ago. Not ideal. I actually would like to coach people into a better financial picture and get their credit up. But you know how it is, a lot of times it's situational and they got to buy right now.
Sure.
Well, that whole crowd got sliced out. Or immediately it was like 640, no pre-approvals without documents, under 660. Some of it's loosened up down to 600, 620. I can get them done. It's just costing even more on top of what it did before for those low credit people.
Right.
So I brought on a credit repair specialist, like he's nationally known, mycreditguy.com, and I get a veterans discount with him. So I've actually put more people in a credit repair for their own benefit lately, because they don't even have that option to just say, whatever, I'll just take what I can get. And so, you know, their payment's going to be $100 less a month. It might actually work out for them, and, you know, they'll send them back to me in a few months. As far as rates, if your credit's good, we continue to see really low rates in the low to mid threes for conventional, and same with VA, FHA, and all that stuff. We do see them below 3% with some points right now. So there's mailers sent out to everyone as soon as the rates went below 3%, but their lag time in that kind of rates went up. And so I just caution anyone that's getting a screaming deal to look at their points and fees on those. But they are still really good. They're not bad. It's just you gotta really be cognizant, and it's there's a lot of different guidelines that kind of go on top of that credit situation, with more verifications of employment, just some additional documentation to make you sure you got your job at closing, just a few other additional overlays here and there, but nothing that's stopping business. We're still closing loans. I would have a little bit more patience with your loan processor, and maybe a little bit more time on your contracts. Throw another 10 days on there if it's not a cookie cutter deal. But overall, we're still moving along great.
So is there anything that you cannot do now that you could do before? I mean, just in general, like you might have different limitations, but what would you?
I won't touch anything under a six. I'm still between it because it depends on who can get the loan, like how will the loan go. There's more to it than if I can get it done. But I would say anything under 620, I won't touch right now. I know some people they're promoting less than that, and that's where I would really caution about those rates and fees. Is you could spend a couple months in credit repair for a lot less money and get a much better rate. But yeah, under 620, and then some of the one-off loans, if like I've talked to you guys about before, if bank statement loans, like a self-employed person that doesn't claim anything on their taxes, those loans would come with a higher rate because you would show your 24 months of bank statements and you'd get qualified and get, instead of 4%, 6%, say. But those are just wiped out. One company tried to start doing them and it was a disaster, and I just completely cut all those off. But those are a couple things I just can't do right now.
We've got another question about, either one of you or both of you chime in. Is there I'm going back to the last segment, but is there a top tech thing, so anything tech related, that you were forced to do because of, all of our stay-at-home orders, that you think you're going to keep in practice because it works better?
For me, is that 904 virtual page, but I got 800 members on it pretty quick, and it seems to connect the community and promote small business and be a nice little place as people continue to gather. And then the camera and the couple of the other tools for customer retention that I talked about, for sure.
Sure. George?
Outside of Zoom, we all need to use Zoom. They just blew up when this became a situation. But yeah, no, the camera aspect is huge. Just realizing, walking around with your phone and taking pictures or video, just some of the tools that are out there right now, so much easier and so beneficial. And we're going to continue to use that. We're just become far more skilled in using it now. So when we are doing out of town buyers, this is going to be a huge benefit for them, to say, hey, well, let's walk you through the homes first. Don't wait until you get here. We can do it during, your inspection time frame.
Agree. Well, Joe, is there anything that you think that we should know that we haven't talked about from your perspective?
No, I think we've really covered the stuff I like to hit. Don't take the forbearance fruit. It's rotten. And, I really also have taken this time to do a lot with the community and promote on that 904 virtual page charity. I really have taken the time to find a little bit about like what makes me happy in this industry aside from doing mortgages. And it's connecting people in our community and connecting different charities to the right places to go. So I've been really focusing on a lot of that. And I know some people are business. And if that's what makes them happy, that's awesome. I do a lot of business, but I also like to balance that with being a big part of the community.
I think that's a good call. I mean, I think right now more than ever, we have to do what we can to support our local communities, and having a centralized place for us to go and connect is important, even if we're not doing it in person. So we all need to find what fills our cup, right? And like you said, it's not always about business. So we can put a link to the 904 virtual page at the end in our comments section too. We'd love to do that for you.
Cool.
And for anybody who's just joining us, obviously you can go back and watch the beginning of our live at any point in time, but we're chatting here. George and I are chatting here today with Joe Verseput of Future Home Loans. His team is 2 Navy vets, and we'll be sure to post contact information for him. Joe just went through some of his hot button issues right now in the mortgage and lending industry, and we're going to run through some more of what we are seeing in the overall marketplace. And we'd love for Joe to stay on for the next few minutes and chime in if he wants. All right, awesome. So we will continue forward. Maybe. There we go. George, George, I assumed you went through, so a lot of our data that we pulled together for today comes from a Metro Study report that is released at 2 o'clock, just an hour and a half before we hop on here. So this is all brand new information to us, information that's trickling out into the marketplace. So generally, George and I sit and go through this information prior to our call. George, do you want to present this slide?
Yeah, we can go through. I mean, listening to some of the updates here, we're seeing so many changes rapidly back to where we were 2 months ago. So once we halted in a week when things have started to loosen up, it feels like everybody's kind of jumped right back into it very quickly. So the return of iBuyers and things like that just are phenomenal. Like it's like our economy is going to start getting boosted right back into it for as quickly as it's halted. We're kind of moving back into that mode. And of course, having some, corrections. They were talking about a lot of people who did have the essentials put on credit, things like that. Those are big factors. We got to make sure, just like you're doing, you're spending your money wisely as you move forward into these next couple months, because we just don't know. We don't know. Don't save your money by not making your payments. But at the same time, don't just not put everything on a credit card and say, okay, everything will be fine.
Joe, looks like you are eager to jump in on the credit card situation.
I mean, that's your credit. You can look at 30% and 50% are break points. So, when you have people come that have maybe a 635 credit, I'll look at their credit report and I have a simulator. You can pay them down, but it's typically pretty standard. If you drop it below 50% utilization, you get a credit boost, and below 30%, you get even more of a boost.
Right.
So you're affecting your credit score by over leveraging your credit for sure.
So we're trying to fix one problem, but we're making another one at the same time.
Exactly.
So yeah, it's definitely something that we have to keep track of in the marketplace, because maybe discretionary spending is down, but some of those necessary purchases are being pushed off onto a credit card instead of, being paid for with cash, because we're not having as much income come in. Some of the other things that we've seen, Florida Trend did a report about the movement of, we've always had a lot of movement from the Northeast down to Florida. We know it's a big retirement state, but even more so now, people are realizing, with a limited income, they can get even more house, for $300,000, $500,000, whatever it may be, and they have their own front door. They don't have to share a condo building, or, they don't have to walk through a common space, a lobby, and their money, not only is their money going farther, but they are looking at it as being a healthier place to live for them, because it's single family housing.
And out of an urban center too, like that. I mean, even though Jacksonville's a metropolitan city, it's not New York City or Boston or any of those areas. I think the pandemic hit so hard in some of the areas, and the lockdowns were a lot more stringent, that people are kind of like picking their head up and going, well, with all this technology, all the Zoom meetings, everyone, like, someone just shut down the other day. I think TIA, someone just shut down, and someone else sent all their workers to work from home. I think Twitter. So with all that technology, you don't have to be in that urban center to have that high-paying, high-power job, and I think that's being recognized right now.
And to your point, there's a lot of millennial buyers, especially in our marketplace, that They don't need, what's the point of living in the middle of an urban city in a big hotspot if you can't go to any of those places?
Right.
It's not open.
Right.
So, and they're generally more expensive. So the availability of being able to work from home, save money, be in a safe environment, a lot of these things are resonating with a large sector of our marketplace as well. Rent payments, something else that was, where did my rent slide go? They're out of order, but rent payments right now are stable. They're out of order, but rent payments right now stable. I don't know if you see anything in the mortgage industry, Joe, that would speak otherwise to this.
My personal experience, I was renting a house in Jacksonville Beach and moved to Atlantic Beach. I got 400 more square feet, and my payment went down by $150 a month. So I have a bigger yard, I have a bigger home, I have an office now, and my payment went down. The home's worth about $50,000 more. So if you're looking par and par, rents are staying stagnant, but your rent payment, if you can afford a home, is still going to be a little bit higher in a lot of areas than actually purchasing a home due to the rates being still low.
George, have you seen an increase in, even if you're window shoppers, even renters right now that are starting to trickle in, maybe they have more time on their hands to look, like maybe I'll look into buying right now. Have you experienced any incoming phone calls or inquiries, George, from that perspective?
We have quite a few people now, especially who were now realizing, hey, rent's going to become, my lease is up in the next 3 to 4 months, are trying to make that jump into home ownership because rates are low. That's huge. I mean, in comparison to where it was, let's say 20 years ago to now, I mean, rates are significantly low to where it makes much more sense to be able to pay a mortgage than it would be to pay rent to somebody.
Right.
So it makes more, and overall, the fact that if you don't always have to come up with money, whether you're a first-time home buyer or if you're a VA, you have options and have no down payment. And if closing costs can be paid for through the seller side of it, the transaction, why not?
Right.
It's the best time.
You skip a month too. That's the other part. A lot of people, you skip a month of your mortgage payment. So
Yes. Clarification for those of you guys, you pay that up front.
yeah,
You pay that up front.
you don't have that monthly bill, but that's actually, we were talking about forbearance, just to kind of go back to that.
Mm-hmm.
That is one solution that's not working for everyone, but works for some, is that if you can refinance, you can actually time it to skip 1 or 2 payments, and
Right.
you're almost getting the same exact thing. And now you're lowering your mortgage rate and saving money each month. So that's one solution I've worked with a few people with. That's really nice as well.
This is a good point. I mean, there's always that gap month, between when you close and then when your next payment is due. Nothing is for free though.
My advice is, I got plenty of it.
Yeah, there you go. Fantastic. So loan numbers are improving on a national index level. So last week, if you guys remember, we at the very bottom, at the worst part of COVID, stay-at-home cycle, we were down negative 35% loan app. Now, last week, that number had improved from negative 35 to negative 15. And then we are now only down 11% from where we were at the beginning of stay-at-home. So that's a huge gap in 4 weeks, increasing from negative 35% to only negative 11% now. Do you see an increase in loan activity, Joe?
And sorry, I was answering a question. Rate of decline. Loan activity. My apologies.
You see, you're not going to be invited back. No, I'm just kidding.
Oh, man.
Do you see, have you seen an uptick that would speak to our loan activity has gone back up?
I think so, but it's hard to slice it all up and give a complete answer as one thing or the other. But I would say the refinances really came into the picture right before the pandemic hit. So that has kind of buffered a lot of the loan officers in this town's pipeline a lot, with the refinances carrying through. But the activity for people asking about buying a new home hasn't really slowed down. there's uncertainty, to be honest, as it slowed down a little, but not to the point where it's a huge concern for my business.
Right.
I'm spending a lot more time just with a lot of information sessions, but the business is coming, loans are coming, and the refinances kind of help, some of the loan officers through that time, maybe in the beginning where things went down.
Fair enough. All right, let's see here. We talked about renters. Customer expectations. So I think there was a lot of concern when everything rolled out, oh my gosh, home prices are going to tank, which goes back to, Joe's thought on, is this like 2008? No, I mean, we're not seeing a huge differentiation between what a buyer is willing to pay and what a seller is willing to sell their home for. And this little graph here is that, 41% now, we're not expecting to lower any prices. You've got slightly, 1/5, 19% saying maybe, but less than 5%. Trend wise in North Florida, you're still seeing 97 and 98% list to sell price. So we're still seeing pricing and price stability. George, do you have anything else? I mean, I don't see anything different.
Right. And that's the biggest thing is like everybody for the past 2 months have said prices are going to drop, prices are going to drop, prices are going to drop. And it clearly has not.
Yeah, there's a lot of buyers you see come in and they think they can pull the Craigslist on the sellers, and you're not gonna lowball them right now like that. I think that I had a whole crew at the beginning of this that thought they could move in and lowball people, and that didn't work at all. So I see the same thing as you are. Home value is holding steady.
Yeah. And that's huge for going into this up next few months where we typically have our largest demand of people moving. The home prices are going to stay exactly where they are, if not probably improve a little bit for the seller situation because of the lack of homes. And that's where I see the biggest issue is that the homes that are coming up go immediately for pretty much asking price, if not higher. So the inventory is so short right now that the prices are just going to continue to rise. It's not going to blow up, but it will continue to stay steady, if not go up a little bit.
Perfect. Well, I hope you guys are still engaged out there. I see that there's still about 10 people watching, so we are so thankful you're here. I want to go through our last few slides pretty quickly. I know that this is our longest chat, which is great. I think this is a lot of really useful information that everybody can refer back to. And just to reiterate what we're all seeing, sellers are motivated out there. We've had a lot of time on our hands while we've been at home. So you're seeing this slide represents, what's happening. This is a national report from Metro Study, but 50% of people are doing DIY projects right now to get their home ready to sell. And this is the time where we would start seeing that influx of homes on the market. And, that next, those next big categories, starting online home searches, working with a mortgage lender to gain pre-approval. These are all things that indicate that those people are going to be back out into the marketplace, which leads me to supply and demand, which this again is a national report. However, I can tell you that from personal experience, and I'm sure these two on the call can echo this sentiment, we are undersupplied here. And the red line on here is what's happening right now. And in 2019, you can see, even in 2019, we had an undersupply in North Florida of homes. So look at that gap. That gap is huge between where we were last year and where we are now with homes on market. So if your home is priced in market and shows well, it is in good condition, you have a very great opportunity to sell that property. So if you are looking to sell, if you are looking to buy, this is still a great time. Interest rates are low. Sellers are paying a lot of attention to getting their homes ready for sale because they know how important that first impression is, especially right now. We all want a clean, safe home to reside in and a healthy home. And, interest rates are super low right now. So it is a great time if you are in the marketplace. That is really our big overview for today. I will, kick it back out there. If anybody has any questions. Oh, I I see a question here real quick. What are some of the best, I'll ask George this question. What are some of the best DIY projects we can do to get a home ready to sell? What are some of the things the buyers are really wanting to see in a home that you've experienced, some trends?
Fresh colors, I mean, is huge. Having a great kitchen, good backyard space. It doesn't have to be huge backyard. It's just a usable backyard. I'll tell you from personal point of mine, when we moved into our new house, which was just 2 weeks ago, I've spent the last 2 weekends cleaning, cutting trees, just cleaning out the backyard, just for years of just trees growing and brush and all those things. But it makes such a big difference to be able to use your outdoor space, because everybody wants to be outside right now. And that's huge.
Yeah, I'm doing a lot. I've done a few cash out refinances. So people taking cash out of their equity in the homes of past clients, just calling them about refinancing. And they're like, well, I need $15,000 to maybe do this project or that. So you're seeing, like you said, Kelly, a lot of people putting that love into their home. Maybe it's for their own comfortability that they didn't have the time. Like George works all the time. He's got time to clear out the brush now. Or maybe you did want to put in that new bathroom update that's going to give $50,000 value to your home, something like that, for down the road, preparing to list it in a year or so. And like you said, I think we'll get a little bit of that bubble coming up for all the DIY crew when they get their projects complete and get ready to list too.
I believe you're right. Well, I really want to, I think we've caught up on all of our questions. There's a comment on here about first-time home buyer. First-time home buyer numbers might increase, which I think I agree with that.
Yeah, I'm doing a lot of first-time home buyer people as well. Back to that rent versus buy conversation, it seems like I've got a lot of calls this week from first-timers.
Yeah, great. Well, Joe, for everybody out there, thank you so much for bringing your expertise
Thanks for having me.
our Ask the Agent. We chatted for a long time today, but I hope that everybody found this super valuable. Joe's contact information is up right now. We'll put it in the contact section as well. On behalf of myself and George and Welch Team, thank you for tuning in. Joe, do you want to take us out?
Yeah, I just hope everyone has a great day. Keep your chin up and keep smiling. I know a lot of people in sales and business and in life, you just got to keep pressing forward and have a smile, but it's okay to have a bad day here and there. Pick your head up. Everyone's going through the same thing.
For sure.
Awesome.
Thank you, guys. Thank you
all.